Good morning, traders. Paul here with GammaEdge. Today is Monday, the 15th of August. Let's get started. Pause your players, please. Read this. Important to you, important to us. If you agree, hit the play button. The summary for today, we had a really good day Friday. We had what we call a linear up signature. We would like you to make sure you understand this. That's a very strong buy. When we see something like that, there is unambiguous evidence that you should be playing on the long side. The long-term trend is still intact and up. We might be a little bit overbought, but just play it accordingly. We're seeing put gamma, which is a short-term phenomena, continuing to drop across the complex. So short-term protection is getting weaker. Conversely, the OI models, which are the open interest models, are showing an increase in the longer-term put protection. So you'll see that here shortly. So the market, it does appear to be taking advantage of low volatility, low prices, and time to add positions here. We are seeing a little bit of a slowing in the SPXP, which is our construct. This is the PM settled SPX, so the weeklies and the dailies. And this suggests that the rate of change of calls is decreasing. They're not being added at the rate that they have been. Note though, the trajectory is still positive, so we are still in that uptrend, but nevertheless it does seem to be slowing. 4,300 remains positive gamma and is very, very strong. In fact, it's the strongest we've observed since last year. And 4,000 has retaken minus GEX. If you recall, Friday we had dropped down to 3,900, so we've moved back to 4,000, and COI and POI, call open interest and put open interest, remain there. So overall, very bullish, if not a little hot, but nevertheless, just play it accordingly. Getting into some of the details, breadth, this is the 52-week new high, new lows, and we're doing pretty well. We're seeing a reversal of this trend that we've been with the new lows dominating for many months now, and now we're starting to see a turning of the ship, and more 52-week new highs are appearing, so that's a good thing. We did see buy programs turn on about 2:30 Eastern time on Friday, but all day long this linear up signature is a very telltale indicator that we should be looking very, very cleanly at long positions. I've annotated with bubbles here how to read the short-term cumulative tick as it weaves around and does things, but the key things to take away here, the long-term trend is intact. We've got positive slopes on the what we call the ribbon on all these moving averages. We're well above that, and you can see that the trajectory, we've got these what we call railroad tracks. We've got this trajectory upward, and unless we get something that looks like this that cuts through the ribbon, all indications are to stay on the bullish side. So buying the pullbacks and things of that nature, paper trades of course, but nevertheless, you should be looking intently at the long side for those short-term adds. The SPX condition, I've highlighted some changes compared to the previous day. In general, we're seeing short-term puts come out of the complex and short-term calls being added. A little bit of a divergence over here. It could have been due to the expiry. I would just read this as more or less bullish across the board. The OI change, as I was indicating earlier, we are seeing, you have to look at the magnitudes here. So this is the most recent data, a day ago before that, and then 2 days ago before that. And you can see we are seeing, definitely seeing some puts going in relative to what we're seeing on the call side and the magnitudes. So just pay attention to this, pay attention to where they're being distributed. And these are the overall strike distributions for both the put side and the call side. When we take a look at the zeros, trajectories are up in the true gamma zero and true delta zero. This is the combo, which is the artificial addition of this and this, which is the AM settled and the PM settled. And you can see that we are still moving upward, although we are starting to roll over just a little bit here in the SPXP. The Qs is another one that is also not hitting on all cylinders. We've got a divergence starting to develop here, so just be aware that the Qs and the SPXP are showing a little bit of maybe getting a little long in the tooth, but nevertheless the trends are still up on the SPY, the Qs, and IWM, and we should be playing that accordingly. Key levels for today. You can see down here we don't have anything appearing in the SPXP, which is the PM settled. Over here on the combo side, I've highlighted the 4300 and 4000. You can see the dominant levels there. Very green when we see this. The delta levels are solid positive, and that's good for us. The dealer response is typically lower volatility, selling the rips and buying the dips, and that dampens volatility. Here we've got a decrease in volatility across the board. We're still staying under that 2%. This is a very conservative number, and the bottom line here is that we do expect to see a continuance of dampened volatility relative to several weeks ago. 0 DTE, I've highlighted just 3 primary levels that we're seeing here. Very, very small transition area. It's actually not a very big expiry for today, but just keep in mind that below this 4240, 4245 area, we start slipping down into negative gamma, but all this positive delta down here will most likely keep us from doing anything stupid today. To the upside, you can definitely see there are some clear strikes that have got some large gamma levels, and just pay attention to those above the 4325, which I don't anticipate today for a reason you'll see here shortly. There is no contribution from the 0 DTE. So you can see as you move up, as this yellow line moves up through here today, more and more of this becomes in the money and potentially could be a liquidation event. When we take a look at the combo, which is the AM and the PM settled, a couple things stick out here at us. So first of all, sea of green for the deltas. That's generally constructive to a controlled descent or a controlled ascent. Volatility is dampened when you see a lot of green here in the net notional deltas. The magnitudes matter. We're getting into magnitudes that we have not seen in a long time. I didn't highlight down here 145 billion down here at 4,000. Extremely unlikely that even if we did collapse down here, and I don't anticipate it because it's pretty far down, that this would become a support level. This would definitely be support. 145, there's no history where we have plunged through that. I will say the 50 billion levels that we're seeing here and 40 billion up here, 40 billion can be taken. I do want everyone to realize that the 4300 strike here is within reach. We could absorb this, but it would be remarkable. Very few instances of absorbing that in a single day. I'd be looking to see this come down a little bit and let the market digest these adjustments. The delta levels, the delta levels and the gamma levels here are extremely high. So I do think the 4300 level is going to remain somewhat of an overhead until we sit here and churn around a little bit and absorb it. 4200 at 54 billion. The gamma level, as we transition down through this, is not nearly as significant as what we're seeing here, so we actually could move down a little bit easier. I wouldn't be surprised, but you can see that 4200 level, there's not a lot below there. 4150 becomes the next level. Again, very significant magnitude. And then below that, it's nothing but red. So if we lose the 4150, clearly 4000 is opening the door. The other thing I just want to draw your eye to is that we've got about 30% of the SPX coming off this week. Where that money goes is going to be material. So we'll want to watch the OI, we'll want to watch the gamma levels, delta levels this week, and see how things change. Finally, taking a look at the SPX structure, I want to draw your eye over here. This level at 4300 is dominant, and we have not seen this magnitude since last year. Very, very strong level. It's going to be hard to move above that, but certainly, as I just said, it's within reach. You can see where we finished here, 4280 on Friday. We're deep in this gamma territory here, 4200 and 4150 become the line in the sand. You can see a transition zone starting to develop here. Below this 4150, it's lights out at least down to 4,000. I'll note we're seeing a good distribution around here. It's not really narrow and concentrated, but the magnitudes are very, very low, so just be aware of that. In general, bullishness, maybe a little hot. Would not be out of the question to pull back and sit at the top of transition. We'll just have to wait and see what happens here. So that's it for today. If you like today's content, please come join us at GammaEdge.us. Click on the pricing tab. That'll take you to a sign-up page, and that'll get you into the Discord. 14-day free trial, all the tools turned on. We got a great group of traders, all experience levels. It's a lot of fun, actually. We have open mic Sunday and Wednesdays, and they're a lot of fun too. Bring your questions. All sorts of things to do there. GammaEdges with an S on Twitter. Please follow us. And then, of course, here on YouTube. If you like today's content, let me know. Smash that like button and add us as a subscriber so you get notified next time Michael, myself, Taylor, or others add a video to our channel. So with that, make it a great week. If you made it this far, thanks for watching, and we will see you in the Discord. Take care, everyone.